please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to our business lunch, and let's take it straight to the big news. We have been getting you the biggest and the best voices coming in from Auto Expo 2018. CNBC TV18's Uttkarsh Chaturdevi spoke to Pawan Munjal of Hero Motocorp to catch up with the company's new launches and what's the growth path ahead.
We spoke, I think, 2 months back in Bahamas, and you had promised 6 new products. Now you've exceeded, now there's 7. Is this now the new foray into the premium and scooter segment which you promised last time?
Absolutely. I've been saying this now for some time, because Hero's market share in the scooter segment is not healthy enough for me. Also in the premium segment, it's a very small market share, which is why we've had a focus in our design development at the R&D for now some time, and you started to see these products being shown now. 30th January you saw the Extreme 200R, and today you saw the Impulse, and also the 2 new scooters, the 125cc Duet and 125cc Maestro Edge.
So this is your foray into the 125cc scooter segment. How important that segment is, and given the fact that now high-powered scooter is something which people are looking at, how important will that segment be?
We all know that amongst the two-wheelers, scooter is the growth market today. And within the scooters, 125cc is the faster growing segment. With our entry into the 125cc with these 2 new scooters, we are bound to get very healthy market shares.
Any targets which you can share with us?
Today we are at about 14% of the scooter market. We are surely gunning for at least 20% very soon.
Speaking about our 100cc commuter segment, that has been doing really well. You know, the numbers have come for January as well, really healthy. Do you think this kind of growth will continue, given the fact that we were speaking about months which had come after demonetization? So why and why these were the months which had the effect of demonetization. But do you think that going ahead as well, we will be able to continue this kind of numbers?
And we've been increasing our market share in those segments, and to do even better, we've rejuvenated the entire range there. We recently relaunched 3 of our products in the month of December in Dubai. And yes, I do expect more growth there, and we expect to increase our market share even further.
What can be the impact of, because the budget is an agri-focused budget this time, so we're speaking about MSP, we're speaking about more infrastructure spending. Do you think that the rural market will revive sooner because of this, and we can see an impact on the sales as well?
Absolutely, it will. It's already showing signs, healthy signs. The sentiment is improving, and in the recent few weeks, we've already seen some betters from the budget. This will definitely give it a push.
All right, and now let's head across. The management of Tata Motors spoke with my colleague Ronojoy Banerjee on the company's targets for the electric vehicles business. Let's hear them out.
Is this the future then going forward? Electric mobility, is that the big thrust area for Tata Motors going forward?
We do believe electric mobility is indeed the future for the automotive industry in India. That's one of the reasons why we said this year it's not going to be a conventional a kind of Expo 2018. It's going to be, as we call it, smart mobility for smart cities. Okay. And if you do talk about the combination of both, it's all about a question: how can we improve on the carbon footprint, and how can we actually how can we bring sustainable mobility for people, for cargo transport, but also for individual transport as well as for mass transport to these cities.
Okay. Are you going to participate in the next round of order for EESL, since you had the most competitive pricing that you had offered?
We don't see another round right now. We are waiting these days to receive the LOA for the larger volume, because, you know, in the first instance it was about 500 units. So there is a pending 9,500 vehicles as part of the initial tender, and we expect to be awarded with the LOA. Again, with the quota being the L1. We have fully industrialized our operations for the Targo EV, and we are going to ramp up production as we speak.
You know, soon after you had taken charge, you had said that by FY19 you were hoping to break into the top 3 manufacturers. You've done Tata Motors passenger vehicles, has had a good run. But what's separating you from Mahindra, who's at number 3, is about 50,000 units currently. Do you still hold on to that target? I will hold you to that. Guenter.
We hold on to the target because a vision, which has actually led to lots of energy, lots of focus in an organization, is not about to be changed just because you might still have and see a gap against the next in the ranking. But you know, we did it already once in the month of November, where we came number 3, which has actually underlined our beliefs that this is a target we can accomplish. And if you take the products we are going to show today, where we are about to launch these products in the next year, with the 2 newer platforms, getting the opportunity to be much faster to market with new top hats, actually covering a larger spread of different market segments in a shorter period of time, and then ramping up our capacity, I think we are well set against our vision.
All right, big voices coming in from Auto Expo 2018. We'll be getting them to you throughout the day. One stock in focus, though, because of earnings and locked-in upper circuit of almost 20% is Saxoft because of good set of numbers there. There's a 42% increase in the EBITDA of the company. With that, we'll slip into a short breather on Business Lunch. And up next, remember, all eyes would be on RBI's policy, which is due this afternoon. What are the expectations there? What are we gearing up for? We'll get you all the details when we return. Stay tuned.
It's been a volatile day of trade, actually, not just for our own market, but across the board for Asia as well. A strong early opening in Asian equities has cooled off. Large-cap Chinese stocks have turned lower. Gains have been crimped in markets like Hong Kong as well. The Nikkei has pared most of its 3% gains from the market open. The Hang Seng is down almost 1,000 points now from the session highs. And the European futures also playing out for you now. There, though, the expectation is that the start could be much stronger. Perhaps once again, the similar trend that we saw yesterday, that at least at open, the European market will react to the overnight US moves and then catch up with the way the rest of the globe has played out. But we caught up with Jonathan Garner of Morgan Stanley this morning, and he says that given the market sentiment, he wouldn't advise buying the dip.
I think it's quite a serious moment in markets. It's one that we were anticipating to some extent, and we want to be cautious here. I don't think that this is something that is a dip to buy straight away. In terms of the overall sort of story here, we think that, as I say, I don't know exactly how the path will move, but essentially there is zero upside. You're only going to make money on the dividend. So in terms of Sensex, 35,700 is around about 3-4% upside. Doesn't quite meet that criteria, having clear sort of blue sky, 5 to 10%. But India is a market that we are overweight. We're more inclined to buy India on a dip.
All right, and now let's talk about some corporates. Well, the Tata Group is one which doesn't stay out of the news for very long, does it? So in keeping with their chief N. Chandrasekaran's blueprint to create One Tata, we learned that the conglomerate is moving ahead with plans to restructure now that defense businesses spread across various group companies. So this could see a coming together of the Tata Group's defense interests under one group company. So Nisha is the one who's actually been working the phones and got this story for us. Nisha, what does the plan actually look like?
So, Sumaira, what we gather from sources with direct knowledge is that this would be one of the first restructuring plans out of the many that could be really coming out of Tata Group in the attempt under the leadership of N. Chandra to really streamline the entire group and make it more efficient and organized. So, first one is the defense business. Tata Advanced Systems, which is a closely held company of Tata Sons, is likely to be the powerhouse of all the defense businesses of Tata Sons and would be buying out the other defense businesses from the group companies. And here, three important companies are prominently given: Tata Motors, Tata Power, Tata Industries. From Tata Motors, a crucial one, 800 crore rupees worth of assets would be culled out and would be plonked into Tata Advanced Systems. This includes TAL manufacturing, which is into aerostructures, and some bit of specialized vehicles business. Now, Tata Motors will retain a large part of that specialized vehicle business. Tata Power's SED business for 1,000 odd crore rupees, which is into defense electronics, would be going to Tassel. And on the other hand, Tata Advanced Materials, which is into armor products, would be going to this particular company. 2,800 crores worth of total transactions intra-group, and it will be a big decision and big restructuring soon to be announced, Sumaira.
All right, we'll keep our eyes peeled for that one. Nisha, thanks much. Let's now shift focus to the Reserve Bank's monetary policy that's due later today. A CNBC TV18 poll indicates that the Reserve Bank is likely to hold fire. But what are the big bankers like SBI expecting? Our colleague Ritu Singh Kada with SBI Chairman Rajneesh Kumar to hear out his thoughts.
Most of the panelists today felt that there will be no change.
That's right. So, but what else do you want to hear from the regulator on liquidity? As you said, bond yields have risen, liquidity is very tight in the system, and the RBI continues with its neutral stance. What would you like to hear from the regulator on that front?
No, that is a decision which regulators will have to take, and that would all depend upon how do they view inflation, spelling out what is happening in the global markets, what is happening to the crude oil prices. So there are so many factors which go into when you take such a decision. If you ask a banker or if you ask an industrialist, they will always say that we want a softer interest rate regime. But that is only an expectation. But when regulators decide, they have to take a view based on what the macroeconomic scenario is and what is in the best interest of the economy and the country.
But sir, as far as banks are concerned, have we seen the bottom of the cycle for interest rates? Will they not go down further from here, given that, again, you said liquidity is tight?
As of now, it doesn't seem to be that there will be any downward movement of interest rates.
What about deposit rates, sir? Is there a possibility of you hiking deposit rates in this environment?
When?
In this current environment, in the short term, is there a possibility?
We did some hike in the bulk deposit rate. Retail deposit we have left untouched as of now. And depending upon how the credit growth spans out, what is the liquidity situation, and if there is a need, then we will revise. That is a decision we take every month, we review every month.
All right, all eyes on the RBI's policy in just some time from now. And straight to the big earnings announcement there, and consolidated net profit for SpiceJet has been up 32.5% at 239 odd crore rupees, and consolidated revenues come in at 26.7% higher at 2,080 crore rupees. So there you go, the stock is up 6% on the back of those results. In fact, looking at some more details really coming in this particular company's results and looking at the revenues, well, 26.7% growth and 32.5% growth when it comes to the consolidated net profit, which is at 239 odd crore rupees versus 180.7 crore rupees on a YOY basis. Yes, Sumaira.
Nisha, for SpiceJet, passenger load factor has never been a problem. Okay, so they've been clocking 90%. In Q3, they have gone over 95%. Passenger yields are up 14%. You've already read out, the basic numbers, profit growth of about, 30-odd%. EBITDA has gone up by 27%. We don't have a poll for SpiceJet, but we do have estimates from Edelweiss, and it was expected to be a strong quarter, and I think SpiceJet has delivered on... Go ahead.
Yeah, so while... passenger load factor has never been a problem for SpiceJet. A few details that have really impacted the overall performance in this particular quarter have come in. 17% crude oil price rise in this particular quarter, and a one-time expense of 25 crore rupees, and an inflationary increase of 3% in other costs. So the costs have gone up. I don't know if this includes crude oil prices because they've mentioned it separately. So they do have and 25 crore rupees as other extra one-time expense. So those must have put some pressure, but despite that, the overall performance has been resilient, and therefore this kind of a performance has really come in. As far as stock is concerned, it's just digesting those numbers, was up over 6%, is now 4.5% higher. In terms of other things, well, looking at some of the other factors, we will actually wait and watch out for the other parameters based on which the performance has really come in, and what has really offset the inflationary pressure, the higher costs, as well as crude oil prices. So that needs to be seen.
No, for them, ATF costs have definitely gone up, okay, for them this time around, though not very significantly. As well, amongst other things, maintenance costs are a tad bit higher this time around. So those are some of the things, but I think overall it's a good set of numbers. There's nothing that you can take away in terms of where they might have faltered. Of course, the environment has been the same for everyone, but from Indigo, SpiceJet has been gaining market share, and I think this is what, the 11th or 12th quarter where they've reported a profit.
So the operational performance has really managed to offset the hike, the inflationary pressure coming in, especially from the crude oil prices and the one-time expense that the company has incurred in this particular quarter. So operationally, good set of numbers
and you know
there.
What? The expectation in terms of passenger yields was only 4%. So coming in at what 14% this time around, I think that's quite a big bump up actually for SpiceJet.
All right, so that was about SpiceJet. So those numbers are out and markets have given a thumbs up to those particular numbers. But staying with earnings from the pharma space, well, Aurobindo Pharma as well as Cipla will be reporting their Q3 numbers today. And Ekta Batra is right here with all the expectations. Tell us, Ekta.
Well, I'll start with Aurobindo, which is expected to report a growth on a year-on-year basis, and that's primarily expected to be led by the US business. Remember that 90% of Aurobindo's business actually is international, and a very small amount actually comes from India. So within the US, what really is going to drive growth this time for Aurobindo is going to be the kidney drug, Renvela generic, which they had launched with limited competition some time ago. We have seen incremental competition come in for Renvela generic, so what we are going to see is that the year-on-year numbers will look good because of the contribution, but Q on Q you can expect the US markets to probably see some amount of sluggishness. Now separately, margins should be maintained at around 23% this quarter. In terms of commentary, what we will be watching out for Aurobindo will basically be how exactly they're treating debt levels, M&A opportunities, as well as any sort of upcoming US FTA inspections which are expected probably in the next couple of weeks. So this would be for Aurobindo. The other one which we'll be watching out for will be Cipla. So Cipla, the revenue is expected to grow around 12%. The most important parameter to watch for Cipla would be the margins, because they have been consistently improving margins, expected to probably come in at around 19% versus 18.6% year-on-year, with a profit growth of around 13% for Cipla. Pulmicort generic, which is basically one of the launches in the US, should add in terms of the US numbers. But if in case there is an operational miss, I don't think that would go down too well with the street unless it is overcompensated by revenue and profit. In terms of commentary, what we'll watch out for is again, what the US markets are looking like, pricing pressure in the US markets, plus what we can expect in terms of regulatory aspects as well as the India business.
All right, Ekta, thanks much. We'll wrap up then on Business Lunch. Do stay tuned. Mid-Cap Radar comes up next.